how to fund your next property deal, and what funding options are available to you. That is the question on today's Property Answers. Now I'm joined, as always, by John and Ranjan. Between them, they have 7 decades of expertise and knowledge in the property industry. Hello to you both.
Hi.
Hi, most of those decades are his, I'm a newbie.
Well, someone said to me by mistake 70 centuries or something recently, so they got that totally wrong. I had to start again. So
no, you're still looking great, guys, don't worry.
Thank you.
Now, if you like this video, please remember to subscribe and click that bell as well to be notified of our new videos. So John, we'll start with you. What are the primary financing options available for funding a property deal?
Can I go back 1 or 2 decades first?
Of course.
Because I think it's important to understand where funding has started and where it's ended up in a way. So 20 odd years ago, Ranjan, and more, I would say that the only real people you could go to borrow money on a property deal were the clearing banks, the NatWest, the Lloyds and people like that. And then when the crash came in 2007, 2008, they all ran away from the situation and didn't really want to support you. Originally, that you could only ever borrow 50% on a purchase price. You put 50% in yourself, equity, and 50% on the build work. And you had to put your 50% in first before the bank would put theirs in. That's how it used to be. Now, it's changed and it's become so much easier to borrow money since 2009, ironically, because suddenly all these bridging companies appeared.
Oh,
many, there's
yes.
hundreds of them. And they will basically lend you up to 70% of the purchase price on the whole. If you're doing a development, this is 70% of the purchase price and all the build costs and 100% of the build costs. So you're only actually putting in 30% equity in total. Now that's changed everything round really and given many more people the opportunity to develop property, whether they're developing it to retain it long term and invest in those properties or to sell them on. That's given people many more options and created a much bigger market, which has been hard for myself and people like Ranjan here because, you know, we've got more competition. And the reason we've got more competition is because of all these damn bridges lending to all these damn people who were never in the business in the first place.
Yep. Ranjan?
I think, no, you're absolutely right, that there's a lot more funding options out there. And I think in the old days, you did need a high degree of cash before you can even play on the field.
Yes.
Today, it's a lot simpler. I mean, you basically need a combination of debt and equity. There's stuff that you borrow and there's stuff that you put in and risk. Now, the great thing about today is that all of that money, or most of that money, can come from a variety of sources without it necessarily being you. There's so many options for debt, long-term lending, short-term lending, such as bridging finance, refinancing other properties and that kind of stuff. And they normally secure that debt on the asset value and give you a percentage of the asset value as debt. And then the rest of the money you have to put in. But the great thing about that money that you put in as equity, you can put that in yourself, you can work with JV partners, you can work with like-minded people. If you find the deal and got the expertise, you can find someone who's time poor and cash rich, come in and basically back you. And Property Elevator, the show that we do, is testament of that. Because people
Who came up with that idea, by the way? Do you remember originally? Whose idea was it originally? Can you remember? Ranjan? Have a think.
I'm sure it was mine. I like to steal anyway. So
well, we know you like to steal. You like to steal the deals on there as well, by the way.
And if you can add to that list as well that Ranjan's going through as well, please comment below.
But on Property Elevator, of course, people come on there with a deal.
Yeah.
They will get some debt financing on it, but they're looking for a backer to give them the remainder of that equity. So today, more than ever, you have to have the knowledge. You have to find the deal. And you just need a little bit of sweat, if you like, to put into it, and you can find partners and backing to do the deal.
So take the risk as well.
Yes.
You've got to be quite a risk taker
to
do that. Brilliant.
You do have to be a risk taker, but property. I mean, I probably do more property developments than you. Would you say you do more investment probably than I do? But you
investment, but development.
Development to invest rather than develop to sell.
Yes.
Whereas I tend to do both and develop to sell as well.
Yes.
And what I would say, we constantly try to de-risk the deal before we buy it.
Right.
People think property developers, it's all about, you know, you're gambling, borrowing lots of money, and it's all big risk. It is a risk, of course, but it's a calculated risk. And we try to de-risk it before we start as much as possible.
Which leads me nicely to the next question. This is for you, Ranjan. How do you determine the most suitable financing option for a specific investment?
That's a very, very good question.
It's a really good question.
Depends what you're buying, and it also depends the speed that you need to. So if you're buying, say, at auction, or you need to do the deal quickly, or the property is uninhabitable, or needs developing before it's of economic value, then you've really got to go to a bridging lender. And because those people can act fast. If it's a long-term lender, then they'll need to see the property developed and producing some cash flow on which they can base your ability to service the debt on an ongoing basis. So a lot depends on the stage of the deal, whether it's cash flow generating, whether it's not, whether you need to develop it out to actually get it to cash flow generating, which option you go for.
Perfect, John.
I think you've answered that very well. I would add to that, if I may. I know you look surprised at me, but I honestly thought you answered that very well.
There you go.
But that's a compliment.
Thank you.
But I would, don't get many from me, Ranjan, so I'll definitely take it, by the way. I would add to that is this: when you're dealing with banks, what you have to remember is that all these banks and bridges need to lend money. They're under pressure to lend it out. Some have some of these bridges need to lend up to 100 million a month.
Why is that though? Why
because they're borrowing it off other people.
I see.
So they're not a bank. So they borrow it themselves and then lend it out at a profit.
Yeah.
And it's an important thing to note that they will secure a funding line from a much bigger set of lenders.
Yes.
And they will be charged a non-utilisation fee.
Yes.
So if they've secured, say, 100 million to lend out, and they've only lent out 20 million, they'll be paying a non-utilisation fee on the 80.
And if you ever want to really upset a bridger, ask them where they're getting their money from and is it secure?
And what would the answer be then?
They'd
panic.
Well, because the truth is, if they're borrowing it from somebody, a bigger entity who then aren't happy with them, they might stop that lending.
Oh.
So they think they're gods, but they're not, because they're still borrowing money off someone else. And what I would say is they all say yes to start with, and then the problems start coming out. Oh, well, we didn't know this, we didn't know that, we didn't know the other. I would always talk to other people who have borrowed off that entity to check that they say what they'll do, and they'll do it in the time period and time scale you want them to do it in. And there's not something at the end that suddenly crops, oh, well, you didn't,
we didn't know about that.
Didn't know this, didn't know, and they're difficult to deal with. They need to be easy to deal with because they're charging a lot of money. And part of a bridging, part of the point of going to a bridging company is that it's easy to borrow money off. And if they put many, many obstacles in the way, it suddenly is not.
Understood.
So talk to other people who have borrowed from them and check that it's an easy process.
Brilliant.
But generally, it's about understanding a little bit about their underwriting criteria because they've got that pressure to lend.
Yes.
So if you tick all the boxes,
yes,
then there is no reason why you won't get the facility. It's as simple as that.
But you say that, Ranjan, but we've all heard of, and we've all been involved probably, and I mean, we never borrowed from bridges until 2011. Never. But never borrowed from bridges. Now we have, for development, we borrow from bridges all the time. Yeah. And it's not cheap money. It's not cheap money. That's what you've got to remember.
Absolutely. And speaking of money then, this leads
but
on to my next question.
But it's factored in the deal.
Oh,
you factor it in the deal.
You factor it in the deal. Of course you do.
The deal's got to work.
And there's many bridges that will lend you the money. So it's not just... And the big thing that makes me very cross is they make out that you're desperate for the money and no one else will lend it to you. That's a load of rubbish. If it's a good deal, there's many bridges that will lend you the money and you can choose which one you want to use.
I think there's also a thing that mistake people make is that they don't think like a lender when they're a borrower.
Absolutely.
Oh, interesting. Yeah. Okay.
And I think that one thing is very, very powerful is if you can wear both hats. Yeah. So, for example, I, like a lot of investors, have a SAS, which is a pension that can invest in other people's deals and property investments. So you wear two hats. So there's some situation, and on Property Elevator, we work as...
Well, in many ways, in Property Elevator, we do work.
Exactly.
We're on the other side almost,
exactly.
aren't we? Yeah.
So when you wear that other hat, like I always say with job interviews, when you interview candidates, then you know how to sit an interview for a job, because you know what the person on the other side of the desk wants to hear.
Yeah.
So it's about having that perspective on what the lender is thinking rather than what you as a borrower want.
Yeah, and speaking of money borrowing, this is a great question for you both. If you had the cash, would you buy property with cash or take the deal? Who's going to start that?
Shall I go first?
Go on, John.
Well, the fact is, sometimes we have the cash and sometimes we don't have all the cash. So property developing and investing is about leverage, but it's leveraging your assets at sensible levels, and those sensible levels are probably 50 to 60%. It worries me when someone says, oh yeah, well, I've managed to got 85% loan to value and all this, because what happens if the market goes down?
Yeah.
Well, if you're at 60, 65%, or the bank want the money back, you can then refinance it with someone else. You can't do that potentially if the market goes down and you're at 85, 90%, which in some cases in past recessions, people have been at and then haven't been able to refinance.
Wow,
Never mind pay the interest. So it's very important. Leverage is very important, but at the right level. Now, if you're buying at auction, we always try and pay cash at auction because it's a stressful situation. You haven't got long to organise the money, and we're in a fortunate position that sometimes we can pay cash, and then we refinance it afterwards at our leisure. If you can do that, that's great. There are bridging companies that will lend, specialist lenders, at auction. You know, if you buy and then you've got 28 days to find the money and complete it, they will do that for you, but it's expensive.
Yes.
The thing is, I agree with that, but I'd add something
very, very key.
Go
on, cash or deal?
No, it depends.
Combination.
I agree with the leverage stuff. So, you know, you don't really want to be over 60% LTV, 40% cash. But the mistake people make is they don't cost the value of the cash they're putting in the deal. So you've got to cost it at least 10% and factor that in.
Fun enough, we put all our, whether it's our money or the bank's money, we've always put everything at the 10%.
Exactly,
wow.
exactly. Because otherwise, how are you making money from this deal?
Yeah.
Are you making this money from this deal because it's a great deal or because you've got cash in the bank?
Interesting, yeah.
Because you can
Get
lend it to
5%
someone
in the
else at 10%.
Yes.
So why should you not lend it to your own deal at 10%?
Do you agree with the 10%? Let us know in the comments below. I think that's very interesting. One more for you then. What factors influence your decision between traditional bank loans and alternative financial methods?
I hate traditional banks.
Yeah? Okay, why's that?
Well, you don't bank at Coots, do you? That's the problem. I do.
I used to. I gave it up because of their fees.
Well, that's because you're so tight.
It's long-winded. It honestly is long-winded. Most of the big four banks, it'll take you 6 months to get anywhere.
Right.
And the pace of the property deals that most people I work with is just too fast-paced for that.
Right.
And the problem is where decision-making is made. You are not dealing with anyone who has the authority to make a decision.
Or the specialist knowledge sometimes.
Or the specialist knowledge.
Yeah.
But when you're dealing with the smaller lenders and the specialist finance people, you're often speaking directly with people who can make that decision.
Well, I think you and I and other people like us are a bit spoiled because we deal with the managing directors of these bridging companies. We know them personally. If there's a problem, we can ring them up and say,
handy, yes.
It's very handy.
Very handy
It's
indeed.
very handy. Now, not everyone is in our position as fortunate as that. What I would say is it's all about the speed. If you need to move quickly on a deal, potentially you don't have much choice but to go to a bridger. If you've got enough time and you've got a relationship with a smaller bank, and I don't mean the big five, I mean others, there are others around. I use a bank in Mayfair who are very good, but they're very, very slow. Lovely people, but very, very slow. Managing director comes out, looks at the property, you have a bit of lunch, he said, John, I think we can do this for you, blah, blah, blah. Very nice, 50% loan to value, no personal guarantees, but it is a bit slow. So on a refinancing where you've got time, that's when I use the more traditional banks.
Brilliant.
That is absolutely exactly spot on. No, but it is. When you've got the time on your hands, the relationship, the advantage with relationship banking is you can get deals. So the other thing with commercial lending, whereas with typical buy-to-let lending on residential property, you can pick lender X and their product is the same, it's on their website, and it's the same for the first deal or the 100th deal. With commercial banking, commercial relationship banking, you can negotiate terms based on the strength of your overall exposure with them and all the business that you've got going on with them. But that takes time. So it's better on the refinance out than it is on actually doing the deal when you really need to make a decision in days.
One quick tip for the viewers is this.
Yes.
When you are looking to refinance or doing a buy-to-let mortgage or that type of lending, check with the bank on what criteria they ask the valuer to value it on. Because they could ask them to value on a vacant possession value or on an investment value. And that can be very, very different. So you might have £1 million worth of property, okay, but they'll only lend you £500,000 on it, not 60% or 70% loan to value, only 50%, because it's valued, because they value it at an 8% yield.
Oh, I see. So that's the investment side.
So the trick is, and there's no reason why you can't ask them this question, ask them on what basis do you ask your valuer to value the property on? Is it to sell it within 60 days? Is it to sell it within 120 days? So ask the question. Don't be ever afraid to ask the question. Basically, they need your business. That's what you've got to remember.
Well, there you go. Well, I hope we've answered all of your property finance questions today. Don't forget to like and subscribe, and we're back with you with some more questions very soon.